Very good morning from London. Welcome to the RANsquawk European morning briefing for today, Friday the 23rd of September. Compared to yesterday's volatility and big sell-off, it's relatively subdued this morning in Europe. Not much in terms of economic data out in the morning or heading into the US session. There is a slight uptick in investor sentiment. We are seeing the equity markets in some minor positive territory. Eurodollar and cable supported, both trading above 50 pips. And we are seeing the dollar index currently down around 0.25%, helping to support WTI and Brent crude futures. Despite the general weakness in the commodity markets, the copper future trading down around 4%, silver down in the spot around 2%, spot gold also having some selling pressure in early trade, coming back to its parity at the moment. Taking a look then at the overnight news, there was the communique from the G20 reaffirming their commitment to the Eurozone and the expansion of the EFSF. There is also some market talk doing the rounds that China may cut its reserve requirement ratio, the RRR, by 50 basis points at some point today over the weekend. That is unconfirmed, just doing the rounds on some of the desks in Europe, but just keep a note out of that as we head into the US session. Also some comments from ECB Belgian member Cohen overnight saying that the ECB may take action at the next meeting in October. RBS in London speculating that this may entail a 50 basis point cut in the key interest rate. So that's also helping support the markets at the moment. And heading into the US session, there has been some comments from Greece this morning. It's being reported that the Greek finance minister told lawmakers that there's three options for Greece, or how the end game will play out. There could be a messy default, the successful implementation of the July 21st agreements, or an orderly default involving a 50% haircut on Greek assets. That's later been denied by a senior Greek government official, but it does have some merit. We're keeping an eye out on any further releases from Greece. It's just coming under some attention. There was also an article from the German press, the Handelsblatt, this morning, which did cause a slight sell-off in the equity markets before rebounding. It noted that Germany may have up to 5 trillion euros in unreported debt, particularly regarding pensions, and that did cause a slight flight to safety for the fixed income markets, coming under some support on the back of that. However, it has been shaken off, but the talk is still out there from the German press. Heading into the US session then is relatively quiet. We only have the weekly equity data in terms of the calendar, and in terms of speakers there may be some comments from Feds, Williams and Dudley later on, but rather than that, it's relatively quiet heading into the weekend. But that's enough from me. Have yourselves a great trading day.